First off, thank you everyone for joining us today. Our webinar was originally scheduled for 4 p.m. and then we realized that we didn't want to sort of compete with the India-Pakistan match today. And so there were a few early bird registrations as well. So special thank you for those people making it here despite the time change. Um, so to begin with, I think we wanted to do a webinar on one of the themes that are looking very positive for India this year, which is basically on the auto sector. So we're looking at from the vault, manual to automatic, and we're looking at certain trends. We're going to look at data. We're going to show you some narratives, walk you through what happened in the last cycle, what's happening today, what is different this time. And of course, I think we hope this is going to be more interactive and engaging. And we invite you to ask your questions. You can type them out in the chat or in the Q&A space, and we'll be happy to take it from wherever, either towards the end of the presentation, or if it's with the flow of what we're discussing, we could probably take it live at that point. So once again, I think another thank you to everyone who's here, and we'll begin with what we had in mind today. So just thinking about where auto was, right? If for those of us who've been investing in the markets for the last maybe 6, 7 years, I think in 2017, 18, 19, what we were hearing about the auto sector was very, very different, right? Let's say, between 2017 and 2019, the production growth in terms of passenger vehicle units that were being created was just about 3% compounded, right? So we were really not creating cars, people were not buying them. The headlines from 2019, and I would invite you to sort of go back at the end of this webinar and just Google news items that were there in 2019. And all of the headlines were about, oh, this is like a decadal slowdown. This sector has no chance of reviving, and we're in a very bad space. And there were a lot of things that were happening at that point that would have put pressure on this. But what we know is that the market works in cycles. Some sectors work in cycles. And when there is a decadal slowdown, eventually there has to be a regrowth at some point. And I think today that opportunity is ripe. Uh, and that's something that we should all be paying attention to as investors. So, post-COVID, you even had supply chain disruption. So, some of the news items from last year were about how there was a shortage of global semiconductor chips, and that was affecting the auto industry, right? So, uh, it has been, I think the last few years have been a little bit chaotic in terms of regulatory changes, in terms of supply chain disruptions, in terms of even slowdown overall. And coming to the regulatory changes, right? There are small things that had a large impact, or some regulatory shifts can actually can be game changers. So the first, in terms of what we're going to cover, is Bharat Stage 6. So one of the reasons why there was a slowdown in 2019 was because Bharat Stage 6 norms were supposed to come into effect in April 2020. But then there was a change in that timeline, and it went live in 2018, right? So then all of these automakers, they had these outdated models that were on their books, which they needed to sort of uh, get off before these guidelines sort of kicked in fully. Right, so there was a sort of rushed sale. A lot of people bought cars at that point because they were getting discounts on those cars that were not BS6 compliant. And this is one of the best emission regulatory standards in the world. It's not just about Indian norms. They've actually been customized to Indian markets as well as our geography and climate, right? And then we had also another interesting regulatory shift in 2018 with respect to the axle norms. So uh, these regulations, so interestingly, right, the axle norms hadn't changed since the 1980s. So you had almost like 30 years plus of the same uh, standards in terms of how much trucks could carry, because essentially what the axle norms did, or the revision, was to help or allow trucks to carry a higher level of tonnage, and that had a lot of cascading effects, and we'll slowly get into that. But these regulations were set in the 1980s, and then they were implemented or reviewed again in the late 1990s. But since then, there has been no update on this, right? So then in 2018, the government sort of came and said they looked into it and they said that, okay, we want to revise certain things. And it wasn't initially very well met. Like the jury was very divided on whether this was a good thing or not. But let's talk about this. If you allowed trucks to carry 20 to 25% more weight based on this change in axle norms, then that would almost mean that this one shift could actually add 3 years worth of cargo into their things per year, right? So your productivity is basically going 3x. It also meant that larger players could now carry more freight, and that would lower the cost of each freight and improve their margins. But for the smaller players, what would happen is they were anyway illegally overloading, and that really didn't help them to sort of add more weightage or improve. So there again, you see a more formalization. The effect is more towards formalization and bringing scale to a particular industry. So these are now, when a regulatory shift happens, right, the effect is not going to be immediate. You're not going to see the changes come in on the next day. This is something that reflects over time, but it does open a doorway for us as investors to think about, okay, what could this mean for the industry, and how is this going to change the way certain things work? And once we're clear about that, I think that would give us a sense of whether these shifts are positive or not so good for the economy, right? Uh, I think another thing that we need to be very, very cognizant of is that fuel prices do drive decisions to buy and sell cars. For a middle class consumer, that is going to be the number one decision making factor. So if I feel that it's going to be very expensive to sort of maintain and own a vehicle, I may not want to shift immediately. And I think Harshil will be walking us through certain trends as to why now this time is different from, say, 5 years ago, and what is actually going to show us. So I'm not going to get too much into that. And of course, if you've been uh, tracking the news in terms of what the infrastructure spending is with respect to roads, and even in terms of what the Nitin Gadkari is saying on infrastructure spending, on road development, the kind of plans that have come up in the last few years. So you can see that there's a massive sort of change in the way that we're looking at connectivity, the way that we're looking at logistics, the way we're looking at transport, the way we're looking at mobility, right? So all of these things are changing, and that in the end is something that's signaling a green light for the auto sector. Harshil, can we move on to the next slide, please? So I think from a blast to the past, we're actually blasting off today, and we're going to look at mobility first as a theme, right? So one way for us to actually measure whether mobility has improved is with respect to the e-way bill, because that is a measure of mobility, right? If we look at 2019, which is basically the light blue line that you see on this graph, per day our daily run rate was below 2 million units. Right now, 2020, of course, which is the beige line, is a bit of an anomaly because it looked like things were doing well in January and February, and then you had COVID, and then it was anybody's guess for that year. But you can see that actually, once the economy reopened, say in June, July, you can see that there was a good pickup in the last quarter or so, and we ended the year above 2 million units. Now, when we moved to 2021, I think we were some barring like your second wave again. So you can see how the pandemic actually really constrained mobility, and that shows in the numbers, right? But post recovery from the second wave, you can see that there was a steady uphill climb, and for most of 2022, we've been above this number of 2 million units per day in terms of e-way bills. And in 2023, it looks like we're actually moving closer to the 3 million mark. So you can see that it took a couple of years for us to get from, say, 1.8 million or to 2 million and above. And now we're closer to 3 million. So the growth to hit the next million is basically not going to take us as much time as it did in the past. Now, the second theme that we would look at is the whole China plus one idea, right? And how we're actually moving not just domestically, but even on a global scale from the idea of made in China to make in India. So this is data that we've taken from GM Financial's report on the auto sector. So if we look at China's market, right? In terms of what they're producing for autos, that is your passenger vehicle as well as your commercial vehicles. And then we look at the split between those two. Uh, China's economy is basically 6 times our economy in terms of auto sector, and this is excluding two-wheelers, right? So the scope for us to grow, because if we look at our population versus China's population, we are actually bigger today, right? So the scope for us to grow is the room for expansion is huge, and so that's where the opportunity is, right? But what else is supporting us in this movement from where we are to where China is today? Next slide, please. So if we look at the China plus one theory, right? Outside of China, India is the only other manufacturer which can operate at this scale, which can operate at this cost efficiency, and I think that is really where the opportunity is. Even for Indonesia to grow to where we are, they have to grow 4 times. So for Indonesia to aspire to be where China is, you have to go 4 into 6, right? That's 24 times. That's a huge headroom. And because we are so much bigger, we have that first mover advantage in terms of being able to expand. So if we look at localization, so this is again commentary that's come in from the report. We're at 85 to 90%, which is much higher than our other peers, right? So if we look at Vietnam, for instance, which is again touted to be the other China plus one alternative, they are at 10%. So that's a huge gap, right? In Indonesia and Thailand are closer to where we are at roughly 80%. So these are just some trends that support the thesis that there is a lot of positives in the auto space in terms of structural opportunities, in terms of headroom for growth. So, but again, it all comes down to whether we're actually going to act on it. That room is there, but uh, what can we actually do to make sure that we use this opportunity that is there today? So to do that, I think we need to unlock themes, and we are going to show you all the themes that we'll be covering in this presentation. So the first is, of course, bigger, better, faster. And then we have um, the idea of replacement, which is in with the new and out with the old. And then we're looking at where the smart money is actually going, right? So what is it that other investors are seeing? What is it that can happen in this market? And lastly, of course, it's good to talk about the positives, but we should also spend some time in understanding what risks are there before us today. And to not miss that while we're looking at the positives, right? Otherwise, there could be a very biased opinion on how things are going to play out, and you're going to be surprised by any negative events which can be prevented. So the first theme is bigger, better, faster, right? And there are three components to this. The first is being a sport. The second is in terms of more power, and the third is with respect to going green. So in trend one, being a sport is all about your SUVs. So we had done a reel for the webinar talking about how this theme has actually gained a lot of traction and importance in the last decade. In More Power, we're only so this is all related to basically premiumization. That is, not only do people want cars today, they also want better cars than they had before. And this doesn't apply just to cars, right? It's to all vehicles that we're seeing in the market. So I'm going to quickly ask you guys a question and I will type it into the chat as well because then we can poll it and everyone can sort of like put in their opinions. So just give me a second to organize the poll. Um, okay, I'm sorry, I'm not getting the poll option right now. All right. So could we just do a quick show of hands, right? How many people think that the new SUV that a new number of SUVs that were launched this year, right? So there is new models, uh, were three. A quick show of hands, please. You can react or you can raise your hand. Okay. So we have two people with three models. Uh, how many people for five models? So I think we have uh, three people for four people, five. All right. Um, how many people think that there were seven new models launched this year? Okay, so we have about six people who think that seven new models were launched. And okay, so let's get to the actual answer. It's actually five new models that were launched, but I'll give it to the people who put seven as well because uh, I think in terms of the Innova versus Maruti, they're actually the same car, but they just go by different names. Harshal, you want to move? Yeah. Sorry, the previous one? Yeah, so these are the five new cars that were launched this year, right? So you have the Honda Elevate, you have from Maruti the Fronx as well as the Jimny, you have the Citroen C3, and you have the Toyota had the Hyrider and the Invictus. So these are the cars that were launched this year, and they've been pretty hot sellers in the market. I'm sure, like, you can always tell us like what you think in the chat. I'm sure you know somebody who's bought this car or who's considered buying this any one of these cars, and that is one of the biggest trends that we're noticing, right? People actually want SUVs today. So we've gone from let's say back in 2012 where uh, you had about uh, maybe 14% of the market, that is 1/4, uh, was SUVs, like vehicle sales, around 14% was for SUVs. Today it's about 50%, right? So 50% of new car sales are actually SUVs. So it's very likely that if you know two or three people who were buying new cars this year, at least one of them is actually buying an SUV. And then we get to the Dil Mange More moment, which is again in line with better or bigger or strong, faster vehicles. Because if we look at the profile of demand in two-wheelers, so in 2013, your sub 125cc motorcycles was about 60% of the market share, right? And that has steadily declined. So over 10 years, that steadily declined to about 52% or so, right? Your share of scooters actually went up in this timeline. So from about 20%, it went to about 30% in the last 10 years. Uh, but your 125cc vehicles kind of has been fluctuating between 12 to 15% in that range. Now, as we move to the next cycle, that is 23, 24, 25, 26, again, what you're seeing is your sub 125 cc motorcycles are actually losing market share. So you're going from about 52% to about 45%, right? Your scooters are gaining more market share, and your 125cc motorcycles, that is basically the larger ones, are more or less at the same level, right? So again, you can see that there's a shift towards this. You're also looking at a shift towards electric, because I think you can see the infrastructure where you are. I think the other day we were at the metro station, and there was actually like a charging point for EVs. So it is showing up everywhere where you are, and I think that's a trend that we can watch out for, and we need to see how that's actually playing out. Okay. I think the polls are working again. So just give me a second and I will type this in. All right. So you guys can vote on the poll. Is everyone able to see it? So you can just quickly type in either yes or no, depending on what your experience is. We'll just wait for a few more people to respond. Okay, so then that would make us at 50-50. Anyone else wants to type in? So you can just put your vote on the button itself. So you can click on either the tick or the cross, and that should record your answer. That way we'll get like a good representation of what your experiences are. Thank you. All right. Is everyone done voting? All right. So I think what we would see is that roughly like two-thirds of you seem to know someone who has bought an EV car this year, and about one-third of you don't, right? But if we had asked this question a few years ago, possibly most of us would have not even considered buying an EV car, but that is something that is actually changing. So if we look at globally, your battery electric vehicles, as well as your PHEVs have, if you look at the sales volume, right? So 2013, 14, 15, 16, you barely had any sales. Then you saw a big jump in 2017, 18, 19 have been steady. But since 2020, you're actually seeing this like stellar sort of growth in terms of market share as well. So in 2020, the EV market accounted for less than 5% of the overall market, right? Today, we're close to 20%. That's going four times in a span of 4 years. So that's a very high amount of growth in a short time span. And this is not just about, the big names like Teslas or whatever. This includes your passenger vehicles, but it also includes trucks and commercial vehicles, where this could be a bigger hit than, what we're looking at just in terms of passenger vehicles. Next slide, please. On. So your EV sales in India, I think, including your three-wheelers and basically your rickshaws. So if you look at the market share for two-wheelers, we've gone from all practically 0% in FY18 to about 5% in FY23, right? With respect to three-wheelers, which is basically auto rickshaws, you don't, I mean, I've seen this in the north. I've not really seen it in Tamil Nadu so far too much, at least in Chennai. Uh, but in the like you're seeing growth from say 14% to about 50%. Now, of course, been a big shift in terms of three-wheelers, in terms of first moving towards like CNG, LNG, and now towards electric EVs. And on the four-wheeler space, you have again grow. This is growing rather slowly. So we are still at that phase where about 1% of the market share, but there is a lot of room to grow. And buses as well as like your public transportation, we're at 5%. So again, that has been sort of like a 5% growth over 5 years. And that's not a small amount, but there is still more room to grow. And with that, I will hand over to Harshil.
Thanks. Thank you, Samyukta. It was very, very interacting. I think this is one of the few webinars that we're trying to run polls and we're trying to do something new, and really appreciate everybody's participation in this. So I think the next trend that we're actually looking to cover, and I won't spend much time. I do want to do a lot of Q&A with everybody. Is the replacement market. Now, if you look at what Vinod Agarwal is telling, he's a very well-known CEO. The biggest growth driver is replacements, because during this 2.5 years ago of recession, replacements have not happened because sentiments were down. Those replacements are happening in the current year and will continue into the next year. Apart from the pent-up demand for replacements, the regular replacements which have to happen for this year and the next year will also happen. So basically, what he's trying to tell is something that we have seen back during the 2010 2015 era, where there was a good amount of replacements that drove demand. Right? You do remember that that was this some sort of a peak in terms of auto cycle, where demand was also driven by replacement. So let's actually run a poll again. When was the last time you bought a car? Was it before 2019? Was it between 2019 21? Was it after 21? So do plug in your answers in the chat box. So I think the majority of the participants have actually voted on before 2019. So this actually makes my job a lot more easier now. So if you look at volumes and what has been happening to volumes, the expectations is that volumes would go up. So if you see back in 2013, 14, we had very low volumes, though at that point of time it was quite high, but we did go through an extreme slowdown after 2019, after we peaked out, where because of all the regulatory issues that came up, that we covered in the initial stages of the presentation, we saw industry volumes coming down. And what is the estimate going out is that the entire industry would grow somewhere around 11%, right? This is only passenger vehicles. But in terms of commercial vehicles, in terms of trucks also, trucks are now at their third year of an upcycle. Now, usually the average age of an upcycle for a truck is somewhere around 5 years, and the down cycle is about 2 years. So we still have enough legroom to grow in the overall auto sector, right? So passenger vehicles are just a part, but in terms of the overall cycle also, it has a good enough legroom for us to grow. Now, in terms of you said it yourself. When was the last time you bought it? Was somewhere around before 2019. So right now, if you see in the system, everybody would have somewhere around 5 years, 5.5 years old cars. These are the average age of vehicles on the road. And the average has somewhere been around 4.5 to 5 years. So we are going much above the average. And this is a good indicator of how demand would actually start coming in, because people have to go out and start replacing their vehicle. And this is not only in the PV side, this is also on the two-wheeler side. We did see that even on the two-wheeler side, the average age of the vehicle on the road is going up. It's much more above average. So this is a trend that everybody must look at. Everybody should also consider doing this. And I'm sure that again, if we do connect after a year and a half or so, I think if we run the same poll, the answer would be different. That most of you would say that, yeah, I bought a Fronx, or I bought a new hybrid vehicle that has come up. So definitely this is a trend that is going to play out. Now to the boring stuff. Let's put our money where our mouth is. Now, in terms of what has happened in the last year, if you see, banks and autos have led the incremental profits in Nifty, which means that around 3.5% of all profits that were made in Nifty itself, they came up from the auto side, which is a very strong number, right? Majorly, we are dominated by banks, and the bank number definitely has to be higher, which it is. But in terms of auto, 3% is a good number to actually look at, compared to all the other heavyweights that are there in terms of technology, in terms of oil and gas, and in terms of public sector entities. Right. So this is a good enough number to look at. In terms of valuations of the entire sector. See, today they are trading below its fair value and below its average of 10 years in terms of valuation of the entire auto sector. And in terms of the profit, if you just look at the universe, so we've taken Motilal's universe, they cover majority of auto names within Nifty 500. And in March, that entire profit pool as a percentage was about 7% of the overall profit pool, right? Which is a good number. If you see in 21, it's still below 21, and 21 was a bad year for the entire industry and for the entire market, right? So going by history also, this is a good enough year for us to start looking at this sector. Valuations are very conservative, fairly conservative is what I would say. And in terms of what you can earn also, and the contribution that they are doing towards Nifty, has enough legroom for the entire sector to grow. So it is a good enough time for us to start looking at this entire sector. Now, what are the risks that are there? Now, in terms of risk, you have been reading also that there is a lot of monsoon issue. Now, we've had very good rains in the south. We've had excess rains in the west, but your farm regions, that is your north side, your Punjab, Haryana, Uttar Pradesh, they've all received deficit in terms of monsoons. So there can arise a scenario where there is weak rural demand, which again translate to weak PVs, weak truck demand, weak tractor demands. Again, we have to see how this entire thing plays out in the years going forward, because usually after a bad monsoon year, it is a cascading effect. It is like a domino effect. Second is high energy prices. So today we are going through big war in Israel, and oil prices have been extremely volatile. They were at 100 and now they are back at 85, and there are again talks of it staying higher than $90. Right. So energy prices are extremely important for us to consider what is going to happen to the entire sector. See, the shift of from combustion engines to EV is still going to take a lot of time. This is not something that can happen today. If you see in the entire volumes also, it's barely a percentage of, you know, our entire total sales. This is not only in India, this is globally. Right. So we are still in the starting stages of growth. We are still seeing people accepting EV now. We are still yet to see how people accept hybrid vehicles. Though the concept of a hybrid vehicle is extremely positive, yet the acceptance rates is something that we have to keep on seeing going forward, and the sales numbers that keep on coming forward. Right. Third is your global deceleration. I don't think that this is a risk that I have to explain. Slowdown is a definite risk. You are seeing that even in the minutes of Fed, they were saying that there is a possibility of another rate hike. Developed nations are definitely caught off guard with this entire scenario of high inflation, because if they do not concentrate on high inflation, then they're going to give up on future growth. It's very simple. They're going to give up on future growth, which is not something anybody would want. Right. So slowdown globally is a very important factor for us to consider for any sector for that matter. This is not only for auto, this is for any sector. You're already seeing the effects of that slowdown in technology, but this is for any sector. And your global banking also is going through a bit of a turmoil. So this is for any sector, and definitely this is not a risk that should be taken very lightly. Now, about our product in terms of our performance, if you look at since inception, we have outperformed our benchmark, which is the multi-asset index. Our inception date was 16 December, so 17.5% is very strong for us. But about 2 years is not a good enough timeline for us to show you or tell you that no, we are doing exceptional work. We do envision this product to grow at very high levels for more than 10 years. Right. So that is our goal. That is our vision. We do complete 2 years now in December, and we're definitely looking forward to seeing you in one of the events that we do at that month. In terms of asset allocation, it's a true multi-asset. It's completely flexible. It's completely dynamic. We don't have a particular cap on any asset class. We can go 0 to 100 in any asset class, be it equity, be it debt, be it precious metals. So if you see, we do have about 10% odd in precious metals. Our entire equity allocation is 78%. It's a mix of direct stocks, ETFs, and mutual funds. In terms of global allocation, we do have 3.5% in global. That is via technology. We have not yet, though the option for us is there, to invest in global auto companies, global auto ETFs. But we are choosing to stay back because we do think that Indian demand is much more stronger, and India is very well placed to take over global auto supply chains. It's an interesting thing to look at. Debt happens to be very small in our portfolio. Cash levels right now is 3%. So we can go 0 to 100 in cash also. There's nothing that is stopping us from doing that. But since it is extremely flexible, we don't deploy all our money in one go. We take time, we slowly build positions, and it takes us about 2, 3 months just to sort of look at an idea and slowly stagger our investments in. So that's how we are completely managing our portfolio. Right now, also, if you look at our current allocation would not be more than 50% of the money. So if somebody starts in today, 50% is what we are looking to deploy. So that is as of current. But so how does Sphere work for you? Uh, we do what investors do. We take sensible calls, we take rational calls, and we invest. So I'm going to open the floor for Q&A.
You can type in your questions in the chat and we'll be happy to take them. You can ask us anything about the auto industry. I'm sure a lot of you have come into this conversation with a certain expectation on what is happening in this space. You can also ask us questions about Sphere, or if you have just general questions about the market, because it has been a fairly volatile month. I think it's worth having conversations about all of these things, and we're more than happy to talk to you about this. Okay, Harshal, we have our first question, which is how do you think battery companies would perform with EVs entering the market?
So is this a direct question to listed battery companies that are there? See, they are still putting up capacity. They're still investing money. Let some technologies develop. See, right now with whatever technologies that are there, companies are doing a very good job. But they are still in the investing stage. They're still in research and development. So let the entire space sort of develop. But definitely there would be a player who benefits out of it. I don't want to name which player, but definitely there would be a player that benefits out of it. And it might not be specifically from the battery side. It can be from anybody within the value chain who can benefit from it.
Yeah, I think also to add, right, the EV trend, like in the charts that we've shown you also, is fairly nascent. We're still in that very early stage of acceptance. Like Harshal talked about, how are people ready to accept, how much are people ready to accept EVs today? And even when we polled everyone, only about two-thirds of the people knew someone who had bought an EV, right, recently. So, it's probably too early for any material benefits to arise from this. Only when you see traction on one side can you actually forecast anything.
See, and by material benefits, it's basically you can ask anybody who's bought an EV car. You would see in 2 3 years they would start. They would be able to look at their budgets and they would be able to see, okay, I'm able to save this much compared to how much I'm spending on petrol or spending on diesel. And only then facts would start coming up. Only then that word of mouth will start playing in, and only then people will start looking at more EV products that are coming in. See, you're seeing it on the two-wheeler side. That's why your two-wheeler number is extremely high, right? So let the entire thing play out is what I would say. How do you perceive the disruption happening in auto space, conventional to electric to fully ethanol engine? See, there are only a handful of ethanol engines that are coming up. Toyota is leading the front in terms of ethanol engines and in terms of hybrid. Uh, so ethanol it's very early. It's not even it's beyond electric also. But definitely the intent of the government is there to have ethanol engines. It may not be 100%, but definitely there is a high blending rate that's happening, and they've been able to meet that particular standard that they said. It was 10 and now it's 20% blend. So blends are happening definitely.
Okay. So next question is, in current valuations, what is the best way to invest in auto sector? Is it through ETF or NF?
So I'll talk in specific to Sphere. So Sphere is doing uh, more stocks than ETFs. For anybody looking to invest in the space, ETF is a good option for a pure play auto index. If you are extremely bullish on the logistics space also, then most of the funds that are there, they are a mix of transportation and logistics. Right. But a pure play, purely auto sector driven, then definitely the ETF is a better option. If you do want a broad-based growth on roads, ports, and railways, and everything to do with mobility, definitely you should look at a mutual fund. Anything to do with mobility, definitely a mutual fund. Sam, do you want to take this question? ESG is sustainable on auto industry?
Yeah, so I think, see, as far as ESG is concerned, right, like if we look at how that market is actually growing in India or how it's developing, I think earlier this year, SEBI actually came out with a categorization for ESG funds. And there are six categories. So that includes something like best in class. Primarily, our history in terms of ESG has been mostly on the governance pillar. We've not really looked at the environment or social pillar much on broader industry classifications. So Western class just means like if I'm looking at the auto sector, probably the person who has the most ESG sort of initiatives running would be the best in class. So negative screening would essentially say that somebody who's not polluting, or there'll be a particular parameter that they use to screen out a company, right? I think with the introduction of the fund categories, you will have more data on who is falling into which bucket or who is going to be there. But I think as of now, you're not seeing too much of that information, but it's only a matter of time. So I do think you will see these trends pick up over time. But today, if you ask me, maybe it's not immediately visible. But from a larger perspective, if we're talking about environment, then I think there is some shift towards EVs, there is some shift towards blended fuels, there is some shift towards electric, and our sources of energy are not necessarily all fossil fuel based, right? So if you're using a greener form of energy, let's say you have your entire house is powered by solar and you have an EV and you're charging it through that, then probably that is more on the environment side than, say, if you were getting power through coal. Um, okay.
So the next question is that we discussed it in the slide that localization in India is at a very high rate, 85-90%. So does it mean that uh, we are producing the needed parts for a vehicle within the country?
Yeah, I think it's two things, right? It's one that you're producing within the country. It's also that you're producing what is relevant, meaning there are certain norms, regulations that are unique to India, which may not be applicable elsewhere. So it's both.
So this is in line with the next question also, is that what is our view on components, auto components, and does EV have fewer components? So you can take that as a basket, actually, that question as a basket. So
Mm.
yes, localization definitely means that you are producing parts that are specific to a particular country, as well as showing expertise that you can produce for any specification that can be met for the world. That's why we have the shift going on from make in China to make in India. This is not only make in China, for example. This is something that we're doing across all manufacturing sectors. You're seeing PLI coming in, and PLI does play an important role in auto also. That before it was Make in India for us in 2014, that entire 4 years was to drive Make in India as a campaign, right, for all businesses. So now it is more like Make in India has become Make for the world. So we have built expertise for us to service within the country as well as service outside the country. Right. And EVs don't have fewer parts. EVs have their niches. They have particular processes. The materials that are being used for EV vehicles are completely different. Definitely, there are some parts that are not there, some parts that are there. Some components are extremely important also. Right. So the material that's being used and the machinery that's being used, the processes that are used, definitely are different for EV, but we have built expertise across channels and across value chains. So this localization is not just something for India, it's for the world.
Correct. Uh, so yeah, like Harshit said, you don't have fewer components in an EV. It's just a completely different sort of engineering, and your engine is different, right? You're not looking at an internal combustion engine, but you're not going to sort of completely shift into this. Our trend, like we are noticing the trend today, it's going to take time before it picks up and it's more widespread. Thank you, sir. Do we have any more questions? We still have a few minutes. All right. All right, thank you everyone for joining us today. Please do make it for our next session. Spread the word. We're happy to do more conversations like this on a weekly basis. It was really nice to have everyone participate on our polls as well as in the Q&A session.
Thank you guys for joining in on a Saturday morning. There is another session also happening from our side. It's probably at 11. It's on banking. I think definitely you should attend it. Sanjay, our banking analyst, is going to cover the entire webinar. So definitely do attend it. It's there on all our social media platforms. So do look it up, do attend it. And cheers. Have a good weekend ahead. And looking forward for India
Enjoy
winning
the
this match.
match today. Yeah.
Thank
See you
you.
all.
Thank
Bye.
you.